Good morning. This is Dylan Jovine with Behind the Markets. Happy Wednesday. Today is Wednesday, April 23rd. And oh my goodness, I need my glasses. Woo! Today, I want to talk about a big story I saw in the Wall Street Journal yesterday. It said basically that this April is the worst April that we've had in the market since 1932, since the Great Depression. It's astonishing, really, isn't it? It's just an amazing thing that we got to say that we survived that together. We survived the worst April since the Great Depression. Take that, Grandpa. See? Now I have something to say to my grandparents. Were they alive? God rest their souls. Anyway, today I want to talk about the price of gold. A lot of folks have written in asking, and this happens regularly for me. And I talk about this probably once a month where we get a bunch of questions. Every day we get a question here, question there about gold. And folks who say, what do I think about gold? What do I think about gold? And the truth is, gold has done well. While this has been the worst market since the Great Depression, the worst April since the Great Depression, conversely, gold has done great. Gold just hit an all-time high at 34.57 an ounce. It's unbelievable. So a lot of folks are asking, what do I think about gold? I am still bullish on gold. I'm still bullish on gold. And what is driving the price of gold? It's the debasement of our currency. It's the fiscal spending, basically. We talked about this a bit in Midnight America with the bond market. We talked about gold. Basically, when you look at a chart of gold, it really started to take off. So gold's been dead for decades. We used to kind of on Wall Street make fun of all the old gold bugs. They'd be like, oh, gold's coming back. But inflation was so low and debasement was so low that nobody really paid much attention to them. But gold started to show some life in Trump's first presidency. He added $7.4 trillion in debt. It started to show some life there. And then Biden added $7.2 trillion in debt, and gold started to really march up. And of course, right now, it looks like Trump is going to pretty much add between $7 and $8 trillion in debt. Also, the budget that's being pushed about looks like it's going to have $1.5 trillion to a $2 trillion deficit for the next fiscal year. So gold will likely continue its march while all this is happening. As long as we keep spending more than we can afford to spend, the effects of that are going to be inflationary. They're going to degrade the value of cash. And that makes gold a very attractive alternative for foreign central banks, for foreign corporations, for investors, individual investors like many of us. Until we get the fiscal spending under control, gold looks likely to keep appreciating. There are a couple of other factors, though, that are really driving gold's drive higher. Recent factors. One of them has been basically the Sell America trade, which is what it's being called now. Basically, foreigners are rushing out basically as quickly as they can. They're selling stocks, bonds, which is very unusual, and all dollars, basically. So they're really pulling money out of America. And just to give you an idea of how serious that is, this is the sixth time in American history that all three of those assets have fallen at the same time. Usually, as I talked about yesterday, the stock market gets hammered, people get scared, they rush into U.S. bonds, they rush into dollars. But this is the very first time that actually that has not happened. So the Sell America trade is on. And what are people doing with all that extra money they're pulling out of the United States? They're hunting the globe for opportunities, but there's a finite amount of those relative to the depth of the American capital market. So they're buying gold. So you continue to see the policies, especially tariff policies, things like that, are pushing other banks, central banks specifically, into gold. And again, we touched on this yesterday. If you're a foreign central bank and you've been lending the government money every single week, every time it goes to the debt markets, every time the U.S. Treasury goes to the debt market, you've been lending them money every week. Basically, in a way to negotiate tariffs, you might decide, heck, I'm not lending you guys money this week. You guys don't seem to understand what we're doing for you. You're just talking about a goods deficit. Guess what? We're actually financing your budget deficit every single day, every single week. So maybe we're going to stop buying that. But those central banks are sitting on a ton of money. Where are they going to go? They go to the gold. So there's a lot of central bank buying. There's a lot of that going on. A lot of the tariff policies driving that. And finally, we can't let Biden off the hook on this. His freezing of Russian central bank assets when the Ukraine war broke out crossed the line in a lot of ways, which incentivized people, especially bad actors, to really push into gold. And it really pushed China to go to a lot of Southeastern Asian nations to get them to de-dollarize, which means drop the US dollar as the reserve currency. So there's a lot of that going on. We've been making a lot of policy mistakes here in recent years. Anyway, so I expect gold to keep going higher. But again, things could change tomorrow. Policy could change, which could change the way I view this. But for today, with the policies that we're running in terms of deficit, the spending, the budget deficit, and trade policies, I don't see any reason why gold wouldn't go higher. Anyway, that's all I have. Have a wonderful Wednesday. See you tomorrow.